Hi, thank you for watching us here at Tax Talk UK, where we talk about all things tax and other important aspects that you need to know about if you are self-employed or running a small business. So we've been asked to talk about business mileage if you're using your own vehicle for the use of your business, and what do you do in terms of claiming the expense against your profit for that. So before we talk about that in more detail, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as being able to find the other information we have on a whole wide range of other topics of things that you may need to know about. If you want to be notified and when we upload new information, you should also turn on the notifications. So back to the use of your vehicle. So you're self-employed, you're working for yourself, and you don't have, you probably don't need perhaps to have a separate vehicle for your business, but that you do need a vehicle, and so you use your own personal vehicle. And the specific question is, what do you claim in your accounts against your profit for that cost? Just a little caveat, just to remind you, if you are using your personal vehicle for your business, please do make sure that your insurance company does know about this, because obviously you don't want to invalidate your insurance by having a use that they don't know about. So back to actually claiming for this as a cost. Obviously this is still a cost because you are not only using the fuel when you go on those business journeys, but also it's wear and tear on your car, use of your wearing your tires. Obviously it will contribute to your mileage, which your insurance will be based on. Your insurance premium may be slightly higher for using the vehicle for business. So as well as the fuel is always the obvious one, that's always what people think that they want to claim, but there is also the contribution to the general running cost. Because of course, if you didn't have a personal car and you weren't maintaining that car, then the potential would be that the business would have to buy its own vehicle. So again, remember the sort of fundamental rule that any costs that we are claiming must be wholly and exclusively for the business. So if you are doing some journeys in your private vehicle that are wholly and exclusively for your business, then those will be what we're looking at. Now, another sort of common sort of omission is people generally always remember if they're actually using their vehicle to perhaps travel to a customer's premises, or to give a quote, can also be sometimes forgotten. But it's sort of generally the admin things that people don't think of. For example, if you have to go to the bank to bank your takings, obviously a lot this day and age is online, but that is a perfect example that is commonly overlooked, that is a trip that's wholly and exclusively for business. And so you should be considering that too. So there's basically two ways that you can work out the cost that you're going to claim for your business use of your personal vehicle. It doesn't matter which you choose. You should choose, and you can choose, the one that is most tax effective for you. But once you've chosen, you must stick with it. So you can't each year think, oh yes, this is best for me this year, this is best for me last year. So the first year you might sort of keep both records and then see which is the most tax efficient for you. But you should also consider whether that is a sort of an accurate reflection of what you will be doing ongoing, to make sure that you are choosing the the method that's going to be best for you. And also sometimes one method will just be easier for you, because it means that it's easier to keep the records in that way. It's no point in choosing a method of using mileage and then actually don't keep any of the mileage records and don't end up claiming, or you know, sort of likewise to have some omissions because you don't consider how you as an individual actually work and which is going to be best for you. So the first way, no particular order, I'll say each is going to be different for different people, but the first method that we're going to look at is the actual costs. So if you're using this method, you would need to keep records of all of the costs that you incur in the running of your vehicle. So your sort of insurance, your tax, any repairs on the vehicle, your fuel, and then alongside that, you're also going to be keeping records that help you to identify at the end of the period, whether you're looking at it on a monthly basis, a quarterly basis, or an annual basis, that you can identify what percentage of on average the use of your vehicle is for personal and for business. And then simply put, you would just apportion the cost. So you'd add up all the costs that you've incurred, and then if you decide that actually 25% of your vehicle use is for business, you would claim 25% of those as costs, as business expenditure. Now, at least initially and at sort of ongoing intervals, you will need to be able to provide evidence of what's led you to the percentage. So it can't just be I think that I use it 50-50. It can't just be your perception. You need to show records. I kept records for the first year, or you know, and accurate mileage records, and I'm able to demonstrate to you therefore in a typical year what I would do, and then obviously 10 years down the line you can't still be relying on those records. You would have to update that to check the percentages are still accurate. So the other more simple way to claim your expenses for your vehicle is to use a simple mileage expense. So, and by this, what I mean is any of the journeys that you've identified as being exclusively and wholly for your business, you would record the mileage that you've incurred. So when I say record the mileage, what I would expect to see in such records would be the date that you did the journey, the place that you went to, the purpose of the business journey. If it was to visit a client, for example, or to drop off supplies to sales to a customer, again, I would expect to see that all documented. Again, of course, with the total amount of mileage done. Now, one thing that sometimes people do forget is if you're going somewhere and it's 5 miles away, you've also got to get back. So it sounds a really obvious thing, but obviously the reason that we're here is to make sure that you don't overlook anything, and this is something sometimes that is overlooked. So make sure that you are including the whole journey and the mileage for that. These days it's quite easy to work out the mileage using Google Maps, for example. If you are already using Making Tax Digital software, a lot of the software providers, a lot of the software will have a built-in function these days that you can track your mileage in that. Some are even advanced enough that they can actually calculate using your GPS your journeys for you. or very technical and advanced. Doesn't really matter how you do it, as long as obviously the records are accurate and detailed, and you can sort of refer back to those. So if you're claiming mileage, the current rates are 45 pence a mile up to the first 10,000 miles within the year, and then that drops down to 25 pence. Now, the important thing to think is that mileage rate that's given, so currently the 45 pence for the first 10,000 miles, that includes all of your use of your vehicle. So that covers the cost not only for the fuel and for those miles that you're claiming for, but also it also looks to cover the insurance, any repairs, everything to do with your vehicle. So you should be sure that if you are claiming mileage for use of your personal use of your vehicle, that you're not claiming anything else to do with your mileage, because then you're going to be duplicating. And it's kind of, unfortunately, it's irrelevant whether you feel that 45 pence a mile accurately reflects the journey, because that is the standard rate that HMRC will allow. Now, again, just another caveat on mileage. We're talking about, when I talk about the set rates that you can claim, and we're talking about claiming for tax purposes, in terms of charging mileage to your customers or clients. Quite often people may choose to use the HMRC amounts. But there's no reason. You could actually charge your customer whatever pence a mile that you wanted to. You could, as long as obviously they're happy and you've agreed it with them. But anything above 45 pence a mile will be profit. So, for example, if you charge your customer 50 pence a mile, you're only able to claim as an expense against that 50 pence 45 pence. So the 5 pence a mile would be profit, and incur tax on it. So just bear that in mind, that it's not this is what you must charge your customers. We're talking about what you can claim for as a legitimate cost for your business. So I hope that this helps and explains how you can claim your business use of your personal vehicle. As I mentioned earlier, please do take the time to subscribe to our YouTube channel. All of our resources are completely independent and provided free for your benefit, to help you in your self-employment and your business. To which end we do wish you lots of luck in it, and thank you again for watching. Goodbye.